Does this mean that we could see a couple of bear markets here and there?
Yes, but I don't think immediately. I mean, we've seen the market start off like a train. Not particularly surprising, I think, because, we're still carrying on from some of the bull points of last year. Company earnings still increasing, good news about Apple, hitting the 3 trillion. But I think the key thing in the first part of the year is going to be the fact that we're going to see pretty low real interest rates. We saw inflation crack up towards the end of last year. We still got pretty low interest rates. I think that's likely to continue. Even if inflation comes back a bit, my forecast for this year really show that, we are looking at a period now where inflation is going to continue to grow. The Fed and the other central banks have really pretty few tools to be able to defeat it.
So what are you seeing in terms of opportunities, especially given that valuations are pretty expensive right now?
Well, I think, first of all, you need to stay in the market. But the kind of things I think that you want to focus on are twofold. One is I think you still need to be in the tech sector. It's proved itself. And remember that tech is the darling of our age, just as previously TV was, cars were, shipbuilding were, even steel back, 120 years ago. We have to look at what are the kind of themes of our age, and tech is still there. Of course, you'll have to get a little bit more careful about it, and I think tech won't be without its concerns, but I think that's obviously an area that one should be. If I was looking at a theme for 2022, I'd be looking at electric vehicles. They're clearly coming down the pipeline. We're now seeing some of the big major companies getting together, and the big thing holding it back, which is the range of electric vehicles, is starting to increase. So I think the supply chain of electric vehicles looks pretty interesting as well. And the third thing, of course, is keep an eye on inflation-type stocks, the kind of companies that have low-ticket items where companies can increase prices bit by bit, the kind of things you see in the supermarket. Those are the kind of companies I'd be looking at on the inflation side.
Richard, you say it's important to stay in the market, but are there any pockets of the market that's looking particularly overvalued to you at the moment, particularly with Fed tightening on the horizon? Would you be looking at any areas to take profit?
Well, I think actually the whole market looks overvalued. We're in an environment where interest rates really mean nothing, and that has affected valuations right across the board. Remember that most of our traditional financial valuations are all relative anyway, so it's very difficult to sort of say, well, we should be here rather than somewhere else. So I think as we're going to go on further in the year, we're going to get the base effect come in, which is where you have the good figures, the recovery, the COVID recovery from last year, start not to look so good this year on a year-by-year view. So I think that'll be a concern. Clearly, debt is a real issue. I don't think we're going to see a systemic issue out of the China real estate side. I think the Chinese will be able to handle that. But of course, we do have a number of these unknown unknowns. And my feeling is probably towards mid-year, we will start to see an event or maybe a couple of events that will shake the markets. So I guess, we're analysts. We have to stick our neck on the line. If I was going to look at a map for 2022, it would be a pretty good first half, and then maybe some kind of bear market, maybe a 20% fall by halfway. The big question is, will we go up more than that fall in the meantime?
Right, Richard, hold on a second, because we are getting a little bit more in terms of that fraud trial of Elizabeth Holmes. And we are now hearing that the jury is saying that it's reached a unanimous verdict on that partial verdict after they weren't able to agree on 3 counts of the 11 charges. Now, we'll have more details in a few minutes, and we'll keep you updated on the latest. But in the meantime, let me turn back to you, Richard, and just ask, what are your expectations in terms of the strength of the dollar, given everything that we've talked about in terms of monetary policy and perhaps the divergence that we're going to see between the U.S. and many Asian central banks as well?
Well, this time of the cycle, when we're likely to see Fed rates rise, the dollar's always going to have an element of strength to it. And I think that that's likely to continue. It may fade as we go further into the year if the bull market continues. But remember that the dollar traditionally has always been a haven. And I'm a great believer in looking back at history. You know, history doesn't repeat itself, but it does rhyme. And typically the dollar is good in times of crisis, not particularly good when markets are pretty stable and it's a risk-on environment. So I would see the dollar continuing to be positive because of the interest rate story, maybe weakening a little bit further out, but I'm just talking about very small percentages. So I think it's the place to be. But of course, currencies are a zero-sum game, so you can't completely stay out of the other currencies. I don't think we're going to see that kind of moves in the dollar against other currencies.